Welcome to the deep dive. We're here to cut through all that noise and really get you the insights you need.
To be properly informed.
Yeah, exactly. And today we are plunging headfirst into the incredibly dynamic world of cryptocurrency. It just never stops.
Never a dull moment.
Definitely not. And our stack of sources today, I mean, they are genuinely hot off the presses. We're talking hours old.
Really fresh stuff.
Yeah, covering everything from Binance halting IoTeX transactions for an upgrade, which is interesting, to some really, really bold Bitcoin price predictions.
Oh, saw that one.
And even some pretty significant shifts happening in global crypto regulation. So our mission today is pretty clear, right? Let's unpack these headlines.
To do it.
Pull out the important nuggets, the stuff you actually need to know, and help you quickly get up to speed on the current crypto landscape, without feeling totally overwhelmed.
Yeah. Make sense of the chaos.
Okay, let's unpack this.
Indeed. Like you said, the market never really stands still. There's always something new popping up, and these headlines, they capture that perfectly.
That is certainly true. And when we talk market movement, few things spark quite as much conversation as Bitcoin.
Always Bitcoin.
So let's kick things off there because honestly, when I saw this headline, my first thought was just, wow, how?
Which headline was that?
The prediction from analyst Brad Mills. He's put out a forecast that Bitcoin could soar to, get this, an astonishing $3 million per coin.
$3 million. Wow.
Yeah. I mean, that's a potential 100-fold increase in its market value.
Yeah.
What's the thinking behind a projection that bold?
That is a staggering figure. Absolutely. And what's fascinating here isn't just the number itself, huge as it is, it's the underlying assumption.
Right. What's the assumption?
The idea is that Bitcoin is kind of evolving, moving from just a niche investment to a global macro asset, something that forces traditional finance to really reevaluate its scarcity. Think about it alongside assets like gold or maybe even sovereign debt.
Okay, so comparing it to gold, that makes sense in terms of scarcity.
Exactly. This isn't just about the price going up. It's predicting a whole paradigm shift in how global wealth is stored and transferred. It envisions this future of massive, widespread adoption.
So fundamental reevaluation then, not just, speculative hype driving the number.
Well, there's always speculation, but the core argument is deeper. It's about a structural shift.
Okay. And moving from those, let's say, audacious long-term predictions to something very tangible happening right now.
Grounding it a bit.
Yeah, grounding it. We're seeing some serious action in the U.S. spot Bitcoin ETFs. They just saw remarkable inflows. $217 million.
Wow, that's a strong number.
Really is. On the surface, that looks undeniably positive, right? But are there any maybe complexities or potential downsides that this influx of institutional money brings to a decentralized asset like Bitcoin?
That's a great question. Zooming out, consistent ETF inflows like this are highly significant. Really significant.
Why exactly?
Because they represent this steady stream of institutional capital. Money coming into the Bitcoin market, often from traditional investment vehicles that, previously had no easy way to get crypto exposure.
Right, opening the gates.
Precisely. This adds liquidity, adds stability, but it also signals this growing mainstream acceptance. Now, as for downsides, well, while it definitely brings legitimacy, which is huge, it also sort of concentrates a certain amount of power or influence into these large institutional holders. And some crypto purists might see that as maybe a slight compromise to Bitcoin's whole decentralized ethos. But I think for most, it's seen as a net positive. It's market maturity.
That's a really important nuance, that trade-off between decentralization and mainstream adoption. Okay, let's shift gears a bit.
Okay.
From Bitcoin to the very vibrant, sometimes chaotic world of altcoin.
Always interesting there.
Definitely. And specifically, let's talk about what some are calling smart money movements. Our sources are highlighting 3 cryptocurrencies that apparently smart money is accumulating for the next altcoin season.
Ah, yes, the altcoin season narrative.
Right, that period where smaller cryptos often see big gains after Bitcoin rallies. So first up is CRO, crypto.com/coin. It's gaining momentum with rising utility.
Okay, CRO.
Then there's PI, which is eyeing a rebound as 68 million tokens unlock. That sounds like a lot of tokens.
It is. That needs some unpacking.
And finally, PEPE, the meme coin, showing bullish strength apparently. So from your perspective, what makes these specific altcoins attractive to these quote-unquote smart money investors? And maybe how can you identify similar opportunities?
Right. So a crucial element to consider here for anyone watching the market is that smart money isn't usually just chasing hype. or at least that's the idea.
Oh.
They're often looking for what we call asymmetric risk-reward profiles. You know, projects with maybe genuine utility that seem potentially undervalued, or projects with a clear catalyst coming up that could fundamentally shift things.
Makes sense. So utility or a catalyst.
Exactly. For CRO, it seems to be about that increasing utility within a growing ecosystem. Real-world use cases, adoption signs, that points towards something sustainable.
Okay. And PI, the token unlock.
Right. PI's story is tied to that token unlock. Now, unlocks can sometimes create selling pressure, right? More supply hits the market.
Yeah, usually seen as negative.
Often, yes. But here, the hope, or the bet, seems to be that these 68 million tokens unlocking will actually boost network activity.
How so?
Well, perhaps by making tokens available to a wider base, new users, developers, maybe incentivizing more active participation in the ecosystem. It's a bet on growth stimulated by supply.
Interesting angle. And PEPE.
Yeah.
Still feels like pure speculation there.
Well, PEPE, as a meme coin, relies much more heavily on community strength, narrative, and, yeah, speculative interest. It often plays on sentiment shifts.
So different drivers for each.
Absolutely. And the key for you, the listener, is to try and look beyond just the price chart for these underlying drivers. Is it utility? Is there an upcoming catalyst? Or is it maybe exceptionally strong community engagement like with some meme coins?
That framework is incredibly helpful, looking for those specific drivers. But, not all altcoins are riding high.
Definitely not. It's a mixed bag out there.
Take KASPA, KAS, for instance. Its price has actually seen, a pretty significant crash, like 65% down from its high back in August 2024.
Ouch.
Yeah, with very few strong bullish moments since then. Yet, despite this big decline, our sources point out that KASPA's top wallets, the big holders, keep buying KAS.
Accumulating on the way down.
Exactly. Isn't buying a crashing asset like that incredibly risky for most investors? I mean, what's the potential downside of that buying the dip strategy, and how do these top wallets maybe mitigate that risk?
You've really hit on a core tension there. This behavior, it seems counterintuitive, right? But it's actually a pretty common strategy among experienced investors, or at least those with high conviction.
High conviction, okay.
But, and this is crucial, it comes with a significant risk if you don't execute it with, well, conviction and enough capital. When an asset they have a long-term belief in drops significantly in price, they often see it as a buying opportunity.
Rather than a signal to get out.
Exactly. They might view the current price as fundamentally undervalued relative to the project's long-term potential. Maybe its technology or its roadmap. The downside, of course, is obvious.
It could keep falling.
It could keep falling, leading to bigger losses. Simple as that. But these top wallets, they often mitigate this risk. How? Through, deep research, hopefully, a very long-term time horizon, and often by dollar-cost averaging.
Spreading out the buys.
Spreading their purchases over time to reduce the impact of that price volatility. It's really a strategy based on fundamental belief, not just short-term market timing.
It certainly highlights that difference, doesn't it? Between a long-term investor mindset and maybe a shorter-term trader.
Big difference.
Okay, moving on to the broader landscape now. There are some real concerns emerging about Europe's position in the global crypto race.
The regulatory picture. Always key.
Yeah. Franklin Templeton, a huge player in traditional finance, is actually warning that the EU might be falling behind.
Falling behind who?
Behind the US and Asia, primarily. They warn the EU risks becoming just a corridor for innovation. Basically, stuff passes through but doesn't stay. That strikes me as a pretty significant concern for crypto's future globally.
It is significant, and this really highlights a key aspect. How directly that regulatory environment impacts a region's ability to, foster and retain innovation in crypto.
Retain being the key word there.
Absolutely. If regulations are unclear or maybe overly restrictive or just too slow to adapt, what happens? Businesses, talent, capital, they naturally migrate. They go to places that offer more certainty, a more supportive framework.
Makes sense. Go where you're welcome.
Pretty much. The corridor analogy is quite apt, actually.
Yeah.
Innovation might pass through, sure, but it won't take root. It won't build wealth or create jobs within that region if the environment isn't right. So, clear, balanced regulation is just crucial for attracting and nurturing crypto development. It ensures a region can actually benefit from the economic activity crypto generates.
And speaking of regulation and maybe integration, there's a pretty significant move towards merging traditional finance, or TradFi, with blockchain tech happening over in the US.
Oh, yeah. What's happening there?
Coinbase. They're actively pushing for SEC approval to offer tokenized stocks on the blockchain.
Tokenized stocks on Coinbase. Wow.
Yeah. So essentially, we could be talking about a world where, I don't know, your stock portfolio could sit right there in your crypto wallet almost.
That's the idea, yeah.
That feels like quite a mental leap for a lot of people, I imagine. How do you see the average investor reacting to that kind of shift, at least initially?
Well, if we connect this to the bigger picture, tokenized stocks, they represent a really fundamental shift, a potential transformation in how traditional financial assets could be created, owned, and importantly, traded.
How so? Give me the practical benefits.
Okay, imagine stocks that can settle almost instantly. Not T plus 2 days, but like now. Trading 244/7, not just market hours. With potentially greater transparency because it's on a blockchain, and maybe lower costs because you're leveraging blockchain's efficiency.
Okay, instant settlement, 24/7 trading, transparency. Sounds good.
Right. For the average investor, it could mean easier fractionalized ownership buying, say, a tiny piece of a very expensive stock. Or maybe easier access to global markets without all the current friction.
But the reaction, initially.
Oh, there will likely be skepticism. Absolutely. And definitely a learning curve, just like there was with online stock trading decades ago, remember?
Fair point. Took time for people to trust it.
Exactly. But over time, as those benefits, the speed, the transparency, the accessibility become more apparent and more trusted, it could fundamentally change how people view and interact with their investments. It really starts blurring the lines between traditional securities markets and decentralized finance, or DeFi.
A true convergence. Okay, we've covered a lot of ground. Bitcoin predictions, ETF flows, smart money in altcoins, COSPA's resilience, regulatory races, tokenized stocks.
It's a whirlwind, isn't it?
It really is. So let's try and tie this together. What does all this mean for you, the listener, trying to make sense of this constantly evolving space? How do we connect these different threads?
Yeah, putting it all together. I think what we've seen today really highlights this kind of dual nature of the crypto market right now.
Dual nature. How so?
Well, on one hand, you have these almost extreme speculative predictions for Bitcoin, right? Hinting at this enormous potential future value driven by that fundamental reevaluation of its role we talked about.
A $3 million idea.
Exactly. But then on the other hand, we're simultaneously witnessing growing institutional adoption. Real, tangible steps towards integrating crypto assets into traditional finance.
Like the ETF inflows and the Coinbase tokenized stock push?
Precisely. Things that suggest a maturing market, becoming more embedded. And then you look at the altcoin space and you see this incredibly dynamic, often contradictory behavior.
Yeah, CRO gaining utility while PEPE relies on sentiment
Right.
and KAS gets bought during a crash.
Right. Some projects being accumulated by smart money, apparently due to utility or catalysts. Others being bought on deep dips by those with deep conviction. It just shows these diverse investment philosophies at play.
So lots of different things happening at once.
Exactly. Ultimately, I think it all just underscores how incredibly dynamic the market is. You have speculative fervor coexisting with serious foundational development. And it all highlights that critical role of thoughtful regulation in determining where innovation actually takes root and thrives.
That's a great synthesis. It's been, another fascinating journey through today's crypto headlines. I really hope you feel a little clearer on the direction things are moving.
Or at least have some new questions to ask.
Or perhaps even have a new lens, through which to view these developments.
And maybe something to chew on. As we see these explosive predictions, right, alongside these very concrete steps to integrate crypto into traditional finance, what does this mean for that fundamental tension? The one between decentralization's ideals and the established financial structures.
Interesting question.
How will that balance ultimately shape the innovations, the opportunities we see next? And maybe thinking bigger, what could be the long-term impact on global financial power structures?
Definitely food for thought there. Keep exploring, keep learning.
Stay curious.
And we'll catch you on the next deep dive into the information you need to know.